Hello and welcome to Star USA Training. Today is Tuesday, November 12th, and we'll be talking about post-entry options. If you're watching this on YouTube, there's a link in the description to the website so you can access the materials. We're recording this webinar. The slides, recordings, and other materials will be made available after the broadcast. All participants are currently muted. The Q&A feature is available if you have any questions. I'll answer some throughout and take more at the end. There will be some polls throughout the webinar. I hope you'll participate. They are anonymous, so no embarrassment will occur. There is an NCB FAA credit available for continuing education credits for CCS participants. The code will be provided at the end of the webinar and in the email we send out with the recording. If you're wondering about licensed customs brokers CEUs, those can't be offered until January 2025. For more info on that, tune into our December webinar. Star USA is a consulting, advice, training, and services firm in the field of international trade and compliance. We're based out of Northeast Ohio, and for the past few decades, we've provided an array of services to importers, exporters, brokers, carriers, and forwarders of many different sizes and skill levels. My name is Jo Harper, and I'm a principal at Star USA. I have my customs broker license, and I've been in the industry for about 15 years. Star loves to work on post-entry, helping your team set up audit processes customized to your risk and your resources, working with your broker to address any issues, identifying the right options to communicate corrections to customs, and crafting prior disclosures to address systemic issues. A quick note, our prep course for the April 2025 Customs Broker License exam starts at the end of December. If you're interested in applying for the Peggy Easton Scholarship for the course, the last date to submit applications for that is November 17th, which is 5 days away. Here is our first poll. This is just a good way to gauge who's on the webinar with you. Again, feel free to ask questions as we move along. I'll try to save some time at the end of the webinar to answer others that I didn't get to. If you ask us something that's more in-depth than we can get into on the webinar, email us and we'll try to help you out. It looks like a high percentage of you review every single one of your entries. Several of you have been involved in prior disclosures, and some of you work for companies that make risk-based decisions around the $20 value difference. We also have some new people. Welcome. We're so glad you're here. I know we have a lot of brokers and forwarders on this webinar, but I'm oriented towards speaking directly to importers. There's a lot of information that I'm going to give that you'll be able to take back to your clients to help them understand what you're saying to them. Reasonable care should be a familiar concept to you if you're involved in import. And if not, take a look at Customs Informed Compliance publication on reasonable care. We link to it at the end in our resources slide. Reasonable care is emphasized in the U.S. Code. You can see it here on this slide that 19 U.S.C. 1484 says importers are required to exercise reasonable care to complete the entry. It's also a significant part of the Customs Mod Act of 1993 that requires an importer to use reasonable care when giving information to the government. Reasonable care has been further defined in court cases to be what a prudent business person would do in the situation that you find yourself in. So it's kind of a subjective, nebulous concept that you still have to go by. Part of an import entry is a statement at the bottom that the information is true to the best of your knowledge or belief, and that you'll produce at once any information that shows that the statements are not correct. That's written into the U.S. Code Part 1485A and is what your broker signs on your behalf in every single transaction. Even if you have a perfect system, mistakes happen. We are existing in a far from perfect system full of fallible human beings, and corrections will need to happen, which Customs understands. And that's why they've created mechanisms to provide updated information. Where did that $20 difference come from? Many importers and brokers get thrown by this passage in 19 CFR 159.6, which says that if Customs finds a difference under $20 in duties, taxes, fees, and interest at the time of liquidation from what was deposited, Customs won't issue a bill or refund for that entry. They have never officially stated that an importer can skip making corrections if the revenue difference is under $20. There used to be a quarterly corrections option where an importer could submit a quarterly report for all changes that had an impact under $20 and then file individual if the impact was greater than $20, but that's gone away with the post-summary correction program. Customs kind of hedges their bets. They will only officially state, we expect entries to be accurate. And the implication there is that you will correct them if they're not. There are several different options when you realize that an error was made on an entry and it needs to be corrected. The right one depends on the type of error, how long it's been since entry was made when you find the error, and whether it's part of a pattern or a one-off occurrence. We won't talk about the first one, entry update before the 10th working day, in depth. So I'll just note that if you find an issue in quantity received or something else before the 10th working day after clearance, your broker can update the entry without it counting as a post-summary correction. Post-summary corrections are an evolution of the correction program that used to be known as the PEA or post-entry adjustment. One interesting thing about that is that PEAs used to be individually reviewed by CBP and either approved or denied. PSCs just kind of happen. Before PEAs, there were SLIs, which were supplementary information letters. Those changed to the PEA program in 2007, which became PSCs in 2016. A post-summary correction overwrites the original entry and is basically a new version of that entry. It doesn't have to be filed by the original broker, but whoever files the PSC now owns that entry. We generally find that brokers prefer to be able to file corrections for their entries, but if a broker refuses or doesn't have the ability, you can have another broker file. The timing of PSCs is within 300 calendar days of entry, or if there's been an extension of liquidation, 15 days prior to the scheduled liquidation. Informal entries, usually you'll find those under $2,500 in value, liquidate immediately, so they can't be corrected by a PSC. A PSC cannot be made for entries that have liquidated. Post-summary corrections can only correct certain entry types and specific data elements. You can both pay Customs monies you owe, the importer owes, and receive refunds for overpayment of duties if that's what happened. Filing a PSC does not remove liability for penalties, but Customs usually doesn't look at a PSC and take that as a basis to initiate penalty proceedings. That might not be true if you didn't correct other entries that also need to be corrected, or if you're filing an inordinate amount of PSCs and they're concerned that you're not practicing reasonable care at the time of entry. All right, we got another poll. This one's a very niche question. It asks where the authority for post-summary corrections come from. I only gave you 4 options, so you have a 25% chance of getting it correct. All right. Interestingly enough, the correct answer was our least popular one. It's in 19 CFR 101.9, which is a basket approval that allows customs to put together various programs and write up guidelines on them and rules for them without having to go through the process of putting them in the regulations. This is also the provision that allows for the reconciliation program. The trick question part of this is that if you regularly deal with PSCs, you'd be referring to the ACE Business Rules and Process document that has the specific how-to for it, and that actually kicks you back to 101.9. A post-summary correction must have all of the entry information from the original entry and then just alter what's necessary. It can only be filed if the entry is accepted, not under customs review, in customs control, fully paid, unliquidated, and does not have a reconciliation entry already filed. There are no limitations to the number of post-summary corrections as long as they're within the time frame. But if customs is reviewing a post-summary correction, then you can't file other post-summary corrections on top of that. We have a question, can you self-file a post-summary correction? This is a really good question. Post-summary corrections have to be filed in the Automated Broker Interface, or an ABI program. And most importers do not have ABI. It's pretty costly. You have to have a filer code to be involved in it. So you could, if you have a licensed customs broker, you have a filer code, and you have ABI. Customs emphasizes in this part of the ACE Business Rules and Process document that revenue and non-revenue related changes should be reported through post-summary corrections as long as you're in the right time frame and the entry meets all of the qualifications. You can't file a post-summary correction to amend an entry for trade programs under 19 U.S.C. 1520D, also known as a 520D. We'll get to those in protests. Basically, about half of free trade agreements, including USMCA, are corrected via a different methodology than PSCs. Most partner government agent data cannot be altered in a PSC. For example, you have to contact the USDA for a refund if you overpaid agricultural fees, but when you do that, you have to submit to the USDA the original entry summary and the corrected entry summary that shows the reason for a refund. You can change an entry from a non-anti-dumping countervailing duty entry down at the bottom left column, entry type 1, to an entry with anti-dumping and countervailing duties on it, entry type 3, and back. So if you originally filed that it had an HTS classification that was subject to anti-dumping, you review and that's incorrect, you can change the entry type to entry 1. If you need to change the importer of record, either the importer or the broker has to submit a Customs Form 3347, and Customs will then make the appropriate ACE changes. When that's done, you can file a post-summary correction to change other elements if you need to. One more poll. This one has 4 different scenarios, and it's asking, when can you file a post-summary correction? The first one, the entry is accepted. The goods came in Los Angeles instead of Miami. Second one, the entry is in trade control, and you need to update the value to include an assist. The third one, the entry is 5 days away from liquidating, and you need to change the HTS classification. And then in the last one, the entry is fully paid, but you need to add anti-dumping and countervailing duties to align. The first one cannot be filed because you cannot change port of entry using a post-summary correction. The second one can't be filed because the entry needs to be in customs control, not trade control. So you need to wait a little bit or reach out to your customs rep and ask them if they can move it into customs control. The third one can't be filed because the PSC has to be filed 15 days before liquidation. Wait and then protest it if you can. And then the fourth one can be filed. So for that, let's go to the next slide to see what needs to happen. If a filer has a post-summary correction rejected, Customs will send it back to them, and you have 2 business days to retransmit the post-summary correction. If you don't do it within that time frame, Customs will use the previously accepted entry for liquidation. Post-summary corrections aren't rejected just because a MIL cert is missing or the broker didn't send anti-dumping payments in with the PSC. They are rejected for being incomplete or not in compliance. You can check the status of a PSC by contacting your center, but Customs recommends that you wait 90 days after the PSC was filed. To make sure that collections are timely, Customs recommends making your payment for a PSC to the port of entry. If you fail to timely make your payment, you are eligible for civil and potentially criminal penalties, administrative sanctions, liquidated damages because it's a breach of bond condition, and potentially suspension from the PSC program. AD/CVD duties have stricter payment requirements. You must have a check mailed or delivered to the port of entry within 3 business days. We're about to switch away from PSCs, so I'll take a couple questions here. One asks, can you make anti-dumping payments via pay.gov? The written instructions specify a check, but I have known successful electronic payments to have occurred. So I would say work with your Customs rep and see what they would like to have done in that situation. If there's no change to duty owed, should you still file a PSC? We are going to talk about that at length when we get toward the end, when we're talking about audits and best practices. The only thing that Customs has said is we expect entries to be accurate. We'll have to get to how companies actually walk that out later. If you change an entry type 1 to an entry type 3 and it liquidates, can you file to change? You cannot file PSCs on an entry that is already liquidated. You might be able to protest it if it meets the qualifications. If during an internal audit it's discovered that an HS code used in the past needs to be changed, maybe information was missing while assigning the code, how can the importer amend the entry? Do you go forward only on the way that that's classified or correct backdated entries as well? This is a really good question, and we'll get to that more as well later. It's going to depend on the threshold your company has for risk. Customs would say that might be a great opportunity for a prior disclosure if you have discovered a systemic error that goes back 4 years. You definitely want to change it going forward. So once you know you did something wrong, you should not continue to do that wrong because that's fraud. Generally, Customs would like to see you correcting it previously as well. PSCs are the option for correcting entries prior to liquidation. After liquidation, the first remedy is often a protest. There are 2 different types of protests, those under 19 U.S.C. 1514 and those under 19 U.S.C. 1520D. Protests are found in 19 CFR 174. In 2016, Customs moved protests to ACE. They aren't filed via ABI, so importers can file them under their own account if they so choose. You have to upload all supporting documents, which might include the commercial invoice, corrected entry information, product detail, a declaration, ruling, or other documents as appropriate. If you want to provide samples, you can send them to your center or upload images of your product and give detail that way. You still can file a paper protest, but those are processed more slowly. Customs does allow 514 protests under 19 USC 1514 on non-revenue related changes as long as it's not adverse to the importer. If you want to correct a revenue-related issue that is not adverse to you, you owe it. Usually a voluntary tender is the appropriate avenue. We'll hit that one later. You are able to protest administrative decisions, clerical errors, mistakes of fact, or other inadvertence that are adverse to the importer. Adverse to the importer means that customs made a decision, there was a broker error or another issue that you don't like that harms your company. Either you're paying additional duties or the change in HTS negatively impacts your ability to qualify for a free trade agreement, or it harms you in another way. There are so many customs rulings on this. You can go to CROSS and input adverse to the importer and read through them, as well as court cases. 2002 Xerox court case had a good definition for clerical error. It's a mistake by a subordinate who does not have any duty to exercise judgment with regard to classification or value. A mistake of fact happens when a fact is not known or thought to exist when it doesn't. Inadvertence is broader, including oversights or involuntary accidents, as well as inattention or carelessness. If you're filing a protest on a reliquidation, you can only protest on the question involved in the reliquidation. So if customs reliquidates line 3 out of a 5-line entry, you can only file a protest on line 3, not on any of the other lines. All right, we have one more poll. This is giving you 4 options, asking you which ones you can protest under 19 USC 1514. Scenario 1, where all documents show an importer of record A, and the broker filed that entry under importer of record B, and importer of record B got a really big bill, can be protested. It's adverse to the stated importer and was a clerical error. Scenario 2, where Company X imported pipes for consumption under 1 HTS, customs changed the HTS to 1 subject to anti-dumping. If the company knew they were subject, they would have put the pipes in an FTZ instead. Customs said, no, you cannot protest this. Failure to recognize anti-dumping duties is not a mistake of fact, it's a mistake of law, which does not have relief under 1514. Scenario 3, where stuffed characters were imported with a toy classification, customs changed them to a pillow classification after they issued a CF 29, can be protested. The pillow HTS has duty on it. The toy HTS does not. You can protest customs administrative decisions of classification if the results are adverse to the importer. Scenario 4 had chemicals that were imported and liquidated under an HTS without duty. The importer later identifies the correct HTS as one with duty. Customs says, no, don't protest that. This is a case for a voluntary tender. If you want to file a protest, read through some customs rulings on protest to see what kind of proof they want. We have a question on the difference between post-summary correction and post-admission correction. I am not familiar with the term post-admission correction as relates to a post-entry resolution. I'm wondering if post-admission correction is something that is done with FTZs, and those don't count as entries, so they would not be done the same way. Then we have protests made under 19 USC 1520D. These are also referred to as a 520D. These are for entries subject to certain free trade agreements. They're listed here: USMCA, Chile, Oman, DR CAFTA, Peru, Korea, Colombia, and Panama. These can be filed for up to 1 year from import. 520D have 1 year from the time that goods were entered to file a 520D. 514 protests have to be filed after liquidation and up to 180 days after liquidation. So there's a difference in the time frame for those. You are only allowed to file a 520D for elements that directly influence a preference claim. If they don't, then you would file using a post-summary correction, pre-liquidation, or maybe a 514 protest post-liquidation. You can only alter the HTS if that changes the rule of origin eligibility. You can only alter the value if it impacts a regional value content calculation. And you can file if you did not claim that special program using the special program indicator on the entry for one of the FTAs listed on this slide. All the other free trade agreements, like Australia, can be adjusted using a PSC. The really nice thing about filing protests is that you're guided by the ACE protest module, and there's some information that's outlined in 19 CFR. You need the name and address of the importer. If you're filing as their agent or their attorney, you need to put that in. The importer number, the specific entry number and date of entry, the liquidation date or the date of decision that you're protesting, a description of the merchandise that's impacted by the decision, what your objection is, and why you're objecting. You need that argument there, distinct and specific with respect to every element that you are objecting to. The date of receipt and protest number are going to be automatically issued by the ACE protest module, which is great. And you also need to say whether or not that entry is subject to drawback. If you are filing a protest on behalf of someone, you have to have a power of attorney that allows you to do so. Once you've filed a protest, it's in customs hands. The module will check to make sure it's complete, as well as a machine can. And once you've submitted, we'll assign it a protest number. When you file, you can request further review. That gives you an extra tab to provide written justification for further review. Accelerated disposition can be requested, but you have to do it via mail to the center. The date of request will be based on the date of mailing, and you can withdraw that request within up to 30 days of the request. You can amend your protest as long as it falls within that same 180-day time frame that filing the protest at all does. So if you file on day 179, you only have 1 day to amend the protest. But if you file on day 4, you have 176 days. You can also withdraw a protest in ACE. Once you do that, you cannot reinstate the protest. It is removed. If you request accelerated disposition or your protest is about exclusion of merchandise, on the 30th day, your protest will be deemed denied, even if customs was just too busy to get to it, unless they approve or deny it before that 30 days. Otherwise, the protest timeline is within 2 years of the date of filing. Further review should only be used for certain scenarios if the protest is about a question that customs has been inconsistent with in rulings or decisions, if it regards a question of law or fact that's not ruled on, if new facts are present, or it's about an issue that headquarters said, we're not going to provide internal advice on this. You can also escalate to the Court of International Trade within 180 days of notice of denial or deemed denial. If your protest is denied and it's not an accelerated disposition protest, you'll get information on why they denied it. There was a question on, is there a regulatory citation where it stated that the center acts within 2 years? There is information on that. If you send me an email, I'll send it to you. I looked at like 40 different sources for this, so I don't have the exact one right on the tip of my tongue, but email me and I'll send it to you. I filed a protest, Customs denied it. Their response was super vague. I asked for further clarification that I didn't get. Is that common? Sometimes it really depends on the customs officer that you're working with. Some of them are fantastic and will give you more information. Sometimes the reason they deny it is vague and hard to explain, which stinks. Sometimes they also just don't have time to write up a really long paragraph on why to everybody. What if the center director doesn't act within the 2-year period? I have seen if it's not acted on within the 2-year period, then come back just as deemed denied. That's when you can escalate for further review. Next up, voluntary tenders. Remember that protests can't be done to make changes that are adverse to the importer. They can only be used to argue against those kinds of decisions. If an importer wants to make a change of that sort after the PSC window is closed, and it's a one-off issue, they can do this via a voluntary tender of duties. The acceptance of a voluntary tender isn't proof that you're right, and you cannot rely on that for guaranteeing future importers. A company imported pet carriers under 9406, which is prefabricated buildings, and decided a year later that they were wrong. They submitted a voluntary tender with the statement that 3926 items of plastic was more correct. Customs accepted the tender and classified the entry that way. Shortly after that, Headquarters Customs issued a ruling that similar carriers should go in 4204, trunks, suitcases, and similar items. When that company went and said, hey, our items should be classified in 3926, we have a voluntary tender that says so, Headquarters sent out a ruling advising that a voluntary tender acceptance is not a controlling legal precedent for correct classification, and a ruling on the correct classification is. The form for voluntary tenders is located at 141-105 and just says that tender is made of X amount as a supplemental deposit of estimated duties and taxes on Y entry with the entry date, then the name of the importer. It requests an official receipt and provides contact information for the IOR. You might submit a voluntary tender as part of a prior disclosure if you are telling Customs you owe them money. You want to do it when you file because, first of all, that's part of a perfected prior disclosure, which we'll get to. And secondly, it prevents interest from continuing to accrue. It can take a long time for Customs to look at a prior disclosure, and interest accrues the whole time unless you've already made payment. It can be part of complying with retroactive duties. It can also be done based on the importer's review and estimate of expected additional duties. You can use them if you bring merchandise in under a temporary import under bond or TIB entry, and you anticipate that you're not going to be able to export or destroy the goods in the time frame, and you're going to breach the bond conditions. Reconciliation is another program allowed under 19 CFR 101.9. Its details are not in the regulations, but in supplementary publications. They used to be in the ACE Business Rules and Process document, but Customs published a separate document with guidance on recon. Reconciliation is a super cool program that you used to have to request to be part of, but it's now open to all importers. It's especially helpful for companies that use deductive or maybe computed value, maquiladoras or tolling, if there's a lot of related party pricing, if goods are imported on consignment, or if you're going to have assists, but they're unknown at the time of entry. It allows importers to make entry based on the best known information and then update it when they know more. It started in 1998 and moved into ACE in 2018. It is voluntary. You have to work closely with your broker at the time of entry filing to ensure that reconciliation flags are correctly applied to the right entries. Customs says that repeated requests to flag missed entries or unflag entries you didn't want are seen as lack of responsible supervision and control if it's the broker's fault, or lack of reasonable care if you're the importer. You must have a recon bond. Flagging an entry alerts customs that a data element is an estimate and it's subject to change. And when you make that flag, you're promising that you're going to file a reconciliation entry with the correct details in a timely manner. Only the flagged issues are eligible for change at reconciliation. Customs liquidates all the other elements of the entry before you file recon. There are 4 issues eligible for recon: value, like assists, computed value, royalties; classification, specifically when there's a pending ruling, protest, or court action; 9802, this is reduced duty treatment for value of components made in the US and assembled abroad. It allows the importer to provide concrete value of the components later; and free trade agreements. A claim under 1520D obligations might be made at the time of recon entry filing. Duties are paid when the entry is filed and can be refunded at the time of the recon entry if FTA is later applied. It's the same list of free trade agreements as the 520D protest option, but you don't have to file 520Ds, only the recon entry. Retroactive flagging is a courtesy, not a right. They'll do it most likely if the custom system was down, if your ABI provider was down, if you filed a PSC on an entry and the flag didn't carry over. That's a system issue. It's not you making an error. Customs may also unflag retroactively if a flagged entry summary was changed to an entry type that's not eligible for reconciliation. When you file your reconciliation entry, you can file it as change or no change. If you file a no change reconciliation, that means that none of the flagged entry summaries on the recon entry had changes to data or revenue. You don't have to transmit line item data with that kind of entry. If you file a change reconciliation, you are showing that data elements or revenue is adjusted. You have to report the new value and new duties, fees, and taxes. Entry by entry filing is what it sounds like. It has to be filed if you are claiming a refund. You have to show all revenue adjustments for every flagged summary individually. It could be a mix of change or no change. There's also aggregate filing. That's done if there's no changes on flagged issues or you're not requesting a refund. You just summarize the data. If you file aggregate recon, you cannot claim drawback on that reconciled adjustment. When you file a recon entry, you have to separate FTA issues from all other recon issues. FTA would be on its own recon entry, value on a separate one. You can file up to 9,999 entry summaries on one recon entry. If you're filing on free trade agreements, you have to do it within 1 year of the import entry. All other issues are 21 months. The timing on that one makes sense because it allows for books to close at year end, which is often required for value issues. And it gives customs time to process items under protest if you're working with classifications that are under protest. Is it a good idea to flag all entries if you don't know which entries will be impacted by assists after importation? Yes, because you can file them as no change if you need to. If only 5 out of 9 entries are changed, that's fine. If it's 5 out of 1,000 entries, you might want to review to see if you can narrow it down a little more. but it's a good idea to flag all potentially eligible entries. Is it possible to flag all entries as USMCA eligible, then adjust later during recon? So when you bring them in, you would claim USMCA and then adjust it later. That is possible. It is not what I would recommend, because when you claim USMCA, you should be doing that knowing that they're eligible and with documentation that says that they're eligible. You should have USMCA certification that is backed up by data. What Customs would prefer is that you bring them in as non-USMCA and then later request a refund of the duties that you paid for the ones that are USMCA eligible. If you don't know, it is more correct to not claim USMCA on any and then get a refund later than it is to claim USMCA on all and then pay later. Will integrators like UPS or FedEx flag entries for recon? They have different teams working entries and they clear things quickly. It depends on your service rep and like which branch of UPS or FedEx you're working with. Usually our clients that are most successful with reconciliation are working with brokers that aren't UPS or FedEx when they are importing their recon entries. Recon entries liquidate after they've been reviewed. Customs recommends that you wait until a post-summary correction or protest is processed before you file the recon entry. If you have to file recon, tell Customs that there's a protest or PSC pending. You might be able to request an extension of liquidation on the recon entry until protest is finalized. You may protest recon entry decisions. If you do that, it can only be on the issues flagged on the recon entry. If you're going to protest, you have to use the entry by entry method. Participating in a recon entry is different from a prior disclosure program because you're not disclosing a violation. You're telling Customs some of this information's unknown. We're going to give you the correct information later. Liquidated damages can be assessed for not filing your recon entry, late filing your recon entry, or missing payment of owed duties and fees. FTA flags, that doesn't happen. You can skip filing FTA flags. If you have liquidated damages assessed and you correctly file the reconciliation entry with payment, that's treated as a petition for relief from those liquidated damages. You can have a different broker file your recon entry than the broker who flagged and filed all your import entries. You can't file recon on all entries. For example, merchandise subject to anti-dumping and countervailing can't be flagged for recon. Most companies dealing with that have their brokers file entries for anti-dumping merchandise separately from other merchandise if they participate in recon. Prior disclosure is the last corrective action we're going to talk about today. Interestingly enough, protests, which are relatively short, have a huge part of the regulations, and prior disclosures are only in one little bit, 19 CFR 162.74. One key factor is that prior disclosure benefits don't exist if you disclose a violation that Customs is already formally investigating. Prior disclosures are a voluntary action that importers can take when they identify a pattern of errors or systemic issues that resulted in incorrect information given to Customs for periods of time. They are often composed for a 5-year period because 5 years is the time period that Customs can go back to review for errors unless the statute of limitations is waived. Remember, a prior disclosure is only valid if you make the disclosure before Customs begins a formal investigation of the violation you're disclosing. One reason to make a prior disclosure is because you can receive reduced penalties. It's also beneficial to your future compliance with Customs and can relieve you from dealing with future CBP investigations, which are often very lengthy. You will not get a refund of duties if you file a prior disclosure, but duties that would have been owed back to you can be used to offset the duties you owe customs. This is only allowed if the entries are liquidated, you didn't overpay on purpose, and all the requirements are met. Disclosures with offsetting have to go for additional review with the Regulatory Affairs Office of Trade, so it takes a little longer. Offsetting, anti-dumping, and countervailing is only permitted if Commerce has issued final liquidation instructions. A prior disclosure usually has 2 steps. The initial notification, which is super high level. Hi, Customs. We think there could have been errors in HTS classification in the past 5 years at these ports. We're doing a full review and will submit a perfected disclosure to the center shortly. That's also referred to as the blanket submission. Customs used to give you a pretty solid span of time between the initial and the perfected, but now Customs is giving a maximum of a 60-day extension between those submissions in most cases. If you don't request that extension, the perfected disclosure and submission of funds is due 30 days after the initial notification is submitted. A perfected disclosure is much longer and usually has a lot of exhibits. Customs will tell you if your disclosure is accepted by issuing a penalty notice with the reduced penalty assessment. If you made a tender of duties at the time that you filed, and the difference in what Customs calculates and what you provided is less than $1,000, they can decide whether or not they're going to charge you that additional money. When you identify the loss of duties, you can either go entry by entry or use statistical sampling. That's usually used when you're reviewing all of your entries is impractical and you use an approved method and execute it acceptably. Get a customs expert if you're going to do that. Prior disclosures are genuinely a judgment call. You'll want to work with key stakeholders and experts to determine whether it makes sense. Think about how likely it is that Customs will target those errors for investigation, how long it will take you to uncover the full scope, if you have the resources, if your company can make the payment, how accurate the information you have available is, and the extent of the errors. Benefits only apply to the violations that were claimed, so it doesn't usually make sense to disclose only one error unless you're 100% confident that everything else is compliant. Think about your value, your merchandise descriptions, your HTS classifications, whether or not you've evaded an anti-dumping order, your origin, claims for preferential treatment. Prior disclosures don't protect you from criminal liability, and Customs is obligated to refer you to a U.S. attorney if you disclose that you're involved in a criminal violation. Get help writing a prior disclosure is basically what I would tell you. We had a ton of really good questions about audits and how to approach in the registration. Audits are not required, but they are recommended. Customs says self-reviews are not only a prudent person's good practice, but they let Customs officers have a little more trust in your company. It's not feasible for most of us to audit 100% of entries and activity. If you have 5 entries a year, sure, but most companies have hundreds, if not hundreds of thousands, of lines of imports. Priorities should be value, additional duties like anti-dumping in Section 301, intellectual property rights and forced labor, HTS, and preferential duty claims, as well as agriculture and quota. Do any of your products fit inside those priority trade issues? Do they meet new rulings and court cases? Changes in your practices are always a good place to keep an eye on. What new vendors do you have? Do you have new HTS showing up on your ACE reports? Are your values suddenly falling or jumping? What new countries are you sourcing from? Are you changing your HTS after anti-dumping investigations start? Use your ACE data to identify outliers. Customs is doing this with your data, So you should also be doing that. When you know your risk, put together policies and procedures and implement controls using SOPs. Your post-entry audit is your monitoring activity, and then you can choose which corrective actions to make using that information. Once you've determined a good percentage of your entries to review, use ACE to target 50% of your quota on high-risk transactions and then 50% randomly selected. If you find issues, increase your sampling and check for patterns. Are the brokers filing approved? Is your IOR correct? Are those entry types ones that you expected? What's your origins? Is anti-dumping claimed and should it be? Did we give all of our certificates of free trade agreements to the broker? Can we back them up? Do our classifications make sense? Are our entries flagged for recon appropriately? Was a PSC filed and did we authorize that? Once your audit is complete, pull together the information. What percentage of your sampling had errors? Does it warrant broadening your sample and going back? What patterns of errors did you see? Is there a vendor that routinely provides the wrong HTS or a broker who has a pattern of typos? Are any of the errors you found preventable? What actions would that take? Do you need to have supplier policies, work with purchasing, have your brokers step up their reporting? Document those findings. Check to make sure that you have the records. Don't rely on your broker to have the documents. Importers have legal responsibility under 19 CFR 163 to hold on to their records, and most broker systems won't have all of the documents you need, or they'll make it unavailable after a certain time frame. Work with your boss, with the other departments in your company, and with motivated suppliers. Help them help you. Then go back to your company risk thresholds before filing corrections with customs. Some companies file everything that results in them paying something, but will only file for a refund if the cost of the PSC filing by the broker is covered by that refund. You have to make your own determinations on what fits based on customs level of scrutiny for your company and your goods, and what resources you have at your company available. There are best practices we recommend that you have and use ACE. Do an internal risk assessment, check out those priority trade issues, audit yourself internally, evaluate your internal controls. Do your SOPs make sense? Do you have the records? When you make corrections with customs, don't be making them willy-nilly. Be intentional about what you're doing. Don't file a prior disclosure that doesn't contain all your corrections. Do implement preventive actions. Keep errors from happening in the first place. Work with your whole company and share your results internally. This slide has links to several materials as well as a few webinars that might be helpful if you're digging into audits and corrective actions. We'll send out instructions on getting the CCS credits when we send out the recording and materials. In the interim, if you want to write down the completion code and redeem it on the website, you are welcome to. If you're watching on YouTube, that code is valid for a year after recording. Thanks so much for showing up today. Everybody had really great questions. Wonderful to talk to you. Have a beautiful rest of your week.